Today is Thursday, August 11th. I want to talk about breadth today and what's going on. And this is a picture of the New York Stock Exchange advanced decline line. And you can see clearly hot stuff in 2016. There's an all-time high here, straight up, straight up, straight up. So everyone's thinking, well, breadth is really good, participation is good. I even wrote an article yesterday that the rally was broadening out as the NASDAQ and the Russell and the mid-cap index all were breaking through resistance levels. So that's a good thing, right? Well, let's take a look. I mean, on the surface, it looks great. So give me a second here while I get this chart to something else. And I'm going to change that because that was a cumulative sum chart. Now I'm going to make it a relative performance versus the S&P 500. We have here the Consumer Discretionary ETF, XLY, up there at new highs, although hasn't really broken through. But what's important here is, look at this, it's lagging. So the supposedly aggressive consumer discretionary sector is lagging the S&P 500. Okay, well that's just one sector. Let's keep going. Let's take a look at tech. And there's your spike last year from all that fun. Clearly a breakout, new highs, clearly outperforming the S&P 500 here. All right, that's good. So now we know tech is good. Let's look at industrials. All right. Well, barely at a new high, but not much going on here relative to the S&P 500. It's flat. Financials. Forget some of that. You don't need that. Oops. Going crazy here. You have a slight outperformance here the last 2 months, but overall still lagging. True, you have a breakout, so that's good after the jobs report last week, but it's not really beating the market right now. Let's look at some of the other sectors which are less aggressive, more defensive, starting with XLP, consumer staples. Well, that's a pretty hot rising trend since last summer. But again, it's not outperforming the market. Energy. You know what's going on there. Not outperforming the market, lagging a little bit lately. Basic materials. Now this ETF is really mostly chemicals, so it does have gold in it. But just flat. So it's not beating the market. Utilities. We know this is a little bit of trouble lately. Lagging. And finally, healthcare. Chart looks okay. Really just pacing the market. So you look at all these sectors which make up the S&P 500, and only one of them is really beating the market. Everything else is either flat or lagging. So where is this breadth flourish that everyone's talking about? The advanced decline looks great, but each sector is not really performing. Who's leading? Who is really beating the market here? And there's no good answer, and it's just tech, and if it's just tech, that means big cap tech is doing well. So is that really where all the strength is? So that's just something to ponder. Check it out. Just don't look at the advanced decline line and think everything is just great. Got to look at all the sectors and see if any of them are beating it. And right now, the only of the usual suspects that lead bull markets is tech, and that's the only one that's really doing something really positive.